Hello, everyone, and thank you for joining both Marta and I for the first of our Commodity Outlook series that we're going to run for the next 3 days. So first of all, I hope you really enjoyed the opening keynote that we just attended. We had very good insight from a panel, and it was quite on point for the current COP26 taking place in Glasgow. One other word that you would have heard more than ESG that came up in the discussion was SDGs, Sustainable Development Goals. So if you haven't had a chance to join the session, you can already access it on demand on the platform. As you know, and I mentioned it, ESG is at the center of our discussion for the online event this year, and we really hope that we'll be able to engage with our panelists on the topic, so don't hesitate to ask any question. So back to today, I have the pleasure to have with me Marta, head of the base metal cost and emission at CRU Group in the UK, and we're going to have a quick dive into the copper market trend, pricing, and role it has to play when it comes to tackling ESG. So welcome, Marta, with us.
Hi, good day.
Good to have you with us. Marta, I'm going to straight go into the topic and looking at the all-time high price that we had in May, which I think reached $10,000 per metric, which was quite impressive per metric ton. That marked 130% growth since March 2020. So we know that the demand is expecting to rise further because of obviously the economic recovery post-COVID-19. So should we be concerned about the potential low copper inventory and supply in the next 2 to 5 years?
Thank you. Thanks again for having me on the panel. And it's a great way to start, definitely, to dive right into the copper trends. And let me start from saying that the copper price has certainly had quite a ride this year, from lows in February to highs in May to lows in August, and then highs during the LMEs where it spiked over the 10,000 again. As you said, the visible inventories are nearing 20 years lows, where the current inventories are estimated to be around a week's of global consumption. But this is quite a complex story, I would say. When it comes to the supply-demand situation for next year, we do see a balanced market, which alongside the low inventories will certainly support the price. The tighter years for copper supply, as you ask, about 2 to 5 years, would, according to us, come rather in the mid-decade time. At CRU, we do see a healthy demand growth, although quite a slowdown, let's say, if we compare to the 2021 growth. When it comes to mine supply, it's definitely on the upside. It has performed very well this year, with around 4% growth year on year versus 2020 same period. The disruption rate, if we look at the mine supply, is very much aligned to the last 20 years average. And we're still expecting around 4% growth in mine supply in 2021 as a whole. It is actually the shipping that we have seen having the greatest impact on copper supply chain versus the mine direct disruptions. Shipping rates have hit the historical highs. The quarantine for shipping vessels around the globe can last from a week to a month. And some locations, such as Southern Africa, have reported shortages of containers availability. So the cathode is available. It's just not really in the right port. Just to give you another example, the normal shipping time from the African copper belt to China is normally around 2 to 3 months. It is now reported to nearly have doubled to around 5 months. And now when we think about China, a third of China refined copper consumption coming from imports, a month delay can equal to a few 100,000 tons of metal. Now, going back to perhaps give you a shorter answer to your question, we do not see immediate risk in terms of supply. However, investment is certainly needed to fill in the looming deficits past mid-decade. The demand continues to grow, and the exposure of copper to the green revolution definitely is taking a bigger and bigger part in that demand growth in the next years. So we would say that with that in mind, the copper price forecast will see very healthy, let's say, gains for the copper producers in the next 5 to 10 years.
Thank you, Marta. And it's very encouraging because we know that, and we will tackle this a bit later today, some key African markets are holding some of the biggest copper production here in Southern Africa and Central Africa. So I just want to touch something that you're obviously working on and are quite passionate about is the ESG requirements. And obviously looking at the E of the ESG, what do you think is the role of the African copper specifically in the global emission curve? And I think you have something to show us about this.
Yes, indeed. And as you said, it's definitely a real passion for me, particularly that I have spent a few of great years working in Zambia at the copper mines there. So I have seen it first place, actually, how it is developing. And I'm able now to point out a few perhaps positives and some challenges as well. So if we think about, let's go back to the start. So copper is certainly key in decarbonization of global energy production. And at this point, around 10% or just over 10% of global primary copper production comes from Africa, with over 90% of it actually coming from Zambia and DRC. Now, if we think about the emissions, approximately the same amount of total scope 1 and 2 emissions from global copper production comes from Africa. So it's quite equivalent to each other. But this results in an average of 1.7 tons of CO2 equivalent per ton of copper equivalent that is actually much below a global average, marking Africa as a whole in just the beginning of Q2 emissions curve. So quite a positive statement here. But we can, of course, deep dive into why, what is being done, and what can be next. So due to the nature of our chat being a quick one, I would summarize the whys to being constrained to the fact that majority of excavations when it comes to Zambian and DRC copper is coming from open pit excavations that heavily rely on diesel consumption for haulage. Secondly, to improve sometimes unreliable power situation, miners find aid in diesel generators. Now, another thing when it comes to the volumes that we could mark here on the positive side is that the copper deposits in the copper belt, being of sedimentary type, miners actually benefit from very healthy grades, whereas Zambian copper average grade is around 30% higher than the global average, and the DRC copper average grade is about 5 times the global average. So something that definitely aids with lowering the total emissions. When it comes to what's being done, I will highlight Zambia. Just considering that the majority of your copper comes from open pits, to still hit an intensity that's below a global average is already an achievement. And I have numerously picked on First Quantum Minerals on that topic as a very positive highlight in how to simply but effectively introduce electrification. With Kansanshi and Sentinel Mine, both open pit mines in Zambia, operating with the use of trolley assist, which is a partial electrification, saving diesel, but at the same time optimizing the cost. Some other ways of let's say, what's being done in that space is investing in rebuilding and renewing hydro capacity in for example, in DRC, where the Kamoa joint venture has signed an agreement with the state-owned power company to upgrade the turbines at the hydropower complexes. Another one of what's being done would be the Bisha mine with the solar hybrid solution, saving around 10% of fuel consumption. And maybe the last one of examples of what's being done would be the increasing trend to start rehabilitating old dams. So start excavating old tailings dams to retrieve the metal at minimum energy consumption, which thanks to the current copper prices isn't a viable option right now. Now, what's next will perhaps be a good way to finish an answer to this question. And I would summarize it in sort of 3 points. First of all, carbon taxation. So if we think about the 6 major countries that we see as copper producers in Africa, only one of them currently has carbon taxation. So introducing more of that across the continent would certainly incentivize and create a greater push towards a stronger E. Secondly, electricity grid mixes. So in the past, in the 2000s, For instance, in Zambia, the hydropower was nearly 90% of capacity delivered energy-wise, but things have since changed as dams are deteriorating. So rebuilding, renewing, and maintaining that capacity is certainly important for the future. And the last part would be the waste disposal and mine closure. So more interest in rehabilitation of the land, in maximizing the value of waste is certainly going to be helpful and a great opportunity for African copper.
Yeah, thank you, Martha. And you're right. It's, mining is a long love story, and you're looking at plan for 20 years usually. So the rehabilitation is a very important point. I like that you mentioned some of the initiative from the major mines around hydro and generating their own power, which take me to the last point, because obviously, as you mentioned, DRC and Zambia account for most of the copper production for Africa. But we know some of the big players there, and you mentioned them like Ivanhoe and others. But how do you think this is influencing global trends in general, and how does it incentivize junior players to actually come in the market?
Thank you. Another really great question. And I think we again have to think about the beginning. So if we think about the total of that copper that is currently excavated in DRC and Zambia, it is definitely largely dominated by big firms with modest cash reserves. And why it is so is, of course, that they can afford a much greater risk exposure than any junior operator. However, at CRU, we do see quite a generous pipeline of committed, possible, probable, and speculative. So let's say all options open for copper prospects, around 500,000 tons coming from juniors. What juniors mostly struggle with, actually, is, of course, securing the investors' capital. The price environment, however, now, currently, does improve greatly the risk-reward proposition. And we've already seen some juniors progressing. And an example from Zambia would be the Jubilee, which is also a great example of that recovering tailings, recovering sort of old ways with their investment in Zambia progressing very well. Another one would be perhaps Namibia with the Combat Mine that has very recently restarted. So what can be done to improve that is potentially, maybe if we look at Zambia first, we see probably the least big tap into the copper potential by juniors. And if we think about this, it's definitely because of the high risk investment profile. But to incentivize, perhaps the government has to review and revise its mining regulations to create a more competitive and supportive platform for investments, where DRC seems to be doing a bit better and attracting much larger investments, hence why we see more committed and probable projects actually coming from there. Another reason for that would, of course, also be the fact that that copper grade I have mentioned earlier is high. So summing up, we do see a number of juniors, and equivalent number from Zambia, DRC, but also from Namibia and Botswana that could now bring in new pipeline of copper production. And if we think about it as a whole versus the larger firms and mid-tier producers, it's around 20% of the full potential. So we are seeing more and more of that happening. And perhaps the strongest junior push that we will see in the next couple of years is exactly from that tailings excavation potential that those countries yield.
Thank you so much, Marta, for that. I really appreciate it, because junior is always a bit of a tricky one with a low capex, and they always wonder, am I going to get into the market? Am I going to secure the fund? So I think it's a very encouraging message. We're reaching the end of our session now. It was a very nice insight, I think, very powerful, and I appreciate your input and the support of CRU Group that you have been giving us for years. So thank you very much, everyone. And Marta, I hope to catch with you very soon again.
Thank you so much. It was great speaking to you, Elodie. Have a great day.
Thank you.
Bye.